Hello, everybody. Kirk Spano. It is Monday, July 29th, 2024, and we are primarily going to be talking about AST SpaceMobile. I wrote a little note about it, but a little cleanup and let's take a look at a few things. All these articles are available on both Margin of Safety Investing and Fundamental Trends, with the exception of shooter swing trading notes. Everything is on both websites. Swing trading notes are only at Fundamental Trends, the rare service. So, Teresa put up the chat highlights for us. I put up an article on AST SpaceMobile with regard to my interview with Scott Wisniewski, the new president of the company, and we're going to talk about that. Trade alert, bought some more energy stocks in the middle of last week. So I am a little heavier in cash at the moment, with the idea that as this market gets choppy, I will want to buy some things. So let's take a look at a chart from Apollo. This is a little bit old. These numbers have started to come together a little bit. What is this? This is the share of the earnings of the top 10 companies in the S&P 500 versus the share price. So you'll see that the earnings are way down here and the share price is way up here. That gap should never be more than a few points. And at the start of the year, it was about 14 points, 13, 14 points. It's come together just a little bit since. But we probably expect another 5 to 10% correction at the very top of the mega caps sometime, I think, this quarter. It would coincide with the whole jitterbugs during election cycles leading up to the election, and we'll see. But I am hoping to get a chance to buy QQQ down around 420-ish. And if I get that opportunity and there's no huge downward momentum, always remember, if something's crashing, you don't just have to buy it because, hey, it's lower than it was before. We'll let it be done crashing. I don't think that's going to happen, though. So as these two alligator jaws get closer together, that's when you're going to be able to buy QQQ, because what we'd like to see is those lines closer to each other so that the next rally, they can open up again. Pretty simple position trading thought process there. Teresa covered the choppy Q3 election years, put some other things in here, show the chart that I had, which indicated that election years have a choppy Q3. Talked about Ford a little bit. ASTS was rallying, so that's what we're going to get to today. This chart here shows this wasn't traders being traders. This is somebody with a deep checkbook, probably bought a few million shares of the stock. And then back to normal value, volatility or volume, and choppy. So we'll see what happens as more people buy the stock. We did the math on Kamala Harris election odds. Basically, I put it at a coin flip. So from Biden being behind to now it's a coin flip again. And in fact, it looks like the momentum is with the Harris administration that raised $200 million in the past week, which I think is a record. We covered managing the risk on the VSL, so we talked about that. Some other article highlights. So these summaries each week are just spectacular for you. If you read nothing else, read the summaries because it'll kind of catch you up. But like the preview, if you're watching a Game of Thrones show or something and they do that 2-minute preview, this is the stuff that already happened. It gets you pretty close to caught up. You know, you miss a lot of the details, but you can kind of start following along again. All right, AST SpaceMobile. So it's had a rally. Today it's a little bit choppy, but here are the things that I covered with the president of the company, Scott Wisniewski. First of all, it did have a big rally because we were buying it way back in the 3s last year. It got up to 19 the other day. I am telling you not to trim your positions. I'm going to show you some math here in a second why you should not be trimming your positions. And you really have to be an excellent trader if you're going to trim positions and hope to get back in. If you already wrote covered calls, I put some instructions inside the chat room on how to roll those out a few months at a time. Try to get them $1 higher or $2 or higher on your strike price, and just keep rolling them out and collecting a little bit of premium until maybe you get a dip and then you can close those positions. In the meantime, you should just buy stock on the dip so that if you do have shares get called away, you really didn't have shares called away, right? It's just, you know, you're offsetting. All right. AST SpaceMobile has huge first mover advantage. I'm going to show you something that points that out. And then the free cash flow in the 3 to 5 year time frame could be around $1 billion per month at 6 times free cash flow, which would be a private equity valuation. That means that 5 years from now, this could be a $70-ish billion company. It's trading for about $3 or $4 billion right now. Now, my estimate is based on the private equity free cash flow. But if this company just gets onto the S&P 500 and trades like a lot of the other stocks, you would expect a higher free cash flow ratio, usually 8, 9, 10, maybe even 11 or 12 if the market is hot. So you could see this be a $150 billion company on $1 billion a month of free cash flow. And there is the potential for this company to have up to about $3 billion a month in free cash flow. If they do, Katie barred the door, this could FOMO its way up in that $200-300 billion, $400 billion range. So don't be too quick to cut. Understand the story. This could be, and I'm not the only one saying this, this could be the biggest customer base in cell phones in the world. So seeing quite the rally since that article I wrote a while back. Talked to Scott Wisniewski, who is he was the chief strategy officer, and now he's the new president of the company as of last week. And there are some things that are going on with that. They have their Bluebirds at Cape Canaveral now, and SpaceX, which was going to launch them, had initially planned to launch them in September. That actually might still happen because SpaceX is back to launching rockets again as of, I think, Friday. So they only had a 2-week window that closed. Those flights get bumped into the next open spots. So it looks like the slot that AST SpaceMobile had is just still their slot. And we will see. If they get delayed, it's not going to be to next year. It'll be like October, November. And that's good because B. Riley had suggested it might not be till Q1. But SpaceX got things rolling so quick and got the government approval so quick that they really didn't have the big gap in launches that everybody feared. They made some senior management changes, including bumping up Scott Wisniewski. What Deutsche Bank is saying here is that they are ramping the partnerships and the marketing now. So they are past the phase of, hey, we got to be able to get the technology to work. They are at the point of, let's sell this. And I think that that is a really good sign that they are moving in that direction so quickly. In my talk with Mr. Wisniewski, a couple of things really clarified for me. I think that this could be a huge, huge deal. Now, you could get a couple jitterbugs. Why? One of the early investors died in December, and for estate planning purposes, they might have to sell, the family might have to sell up to 10 million shares. I don't know if they're going to sell that many of the shares, but if they did, it would be a 3-ish or 4-ish day drag on the stock. So we will find out if that happens. There was a filing that the shares may just switch from one entity to another entity, but we don't know that. The family hasn't disclosed. So my guess is they sell some of these shares, probably up to around half, if I understand the tax planning ramifications correctly, and I'm close. If they sold half, then they can cover all their taxes, and they should have the ability to keep the rest if the family wants to keep the rest, right? If there's not just people who want to spend the money. But, this guy made a small investment, and I believe it was $10 million and turned it into $100 million. So, hey, good for him. 10xer. Everybody likes a 10xer. So I think that we should expect around 5 million shares to come into the market. That should cause a couple days of jitterbugging at some point, if that, or maybe that's what's going on right now. Outside chance at all 10 million shares going into the market. So if you see some jitterbugging on this, buy those dips, in my opinion. I don't know if I have, oh, here you go. There you go. Scotiabank. We believe ASTS has the potential to become the world's largest wireless company by subscribers. Right? So I think it's really important that we wrap our heads around that statement because I agree with them. And I've said this. I think that they could have more customers than any other company in the world because they're doing business with over 45, and I think it's around 50 according to Wisniewski companies right now. So if 50 cell phone companies are letting them get access to their client base, now that doesn't mean that they make as much money as an AT&T or Verizon per customer, but one of the things that's going on here is it's a 50-50 revenue share. So if you or I buy this service through ASTS so that we have a full connectivity wherever we are for $10 a month, which is what it's going to be priced at, it probably goes up to 15 in the richer countries. But at $10 a month, AT&T or Verizon gets $5. ASTS Mobile gets $5. The margins are going to be at least 50%. Sounds like in the 60s somewhere. So if you have margins in the 60s, that means, you know, say $3 a head is what your free cash flow ends up being. Now, just in the United States, you have, do some back of the napkin math, just in the United States, you have a potential for 230 million customers between AT&T and Verizon. All right, so let's take $10 a head being the price. And then let's think 10 to 20% of the people are the investor class, right? The people who $10 a month is no big deal. So I think that you probably get at least 10% of this 230 million that actually travel. So according to a couple different sources, about 3/4 of American people travel outside of their regional area, outside their city. So if there's 170 million people who actually leave their direct cell phone area, and 10% of them at $10 a head end up paying for this, you get 17 million all the time customers, which equates to $85 million per month. That's $1 billion in annual revenue with margins of, you know, it's going to be close. It's going to be in the 60s, but I put 50 just to be conservative. So let's have over $500 million in revenue. What does that do? In 1 year, they can pay for their entire next batch of satellites. Ooh, nifty. Self-financing. Now, I think that most Americans will intermittently use AST SpaceMobile services for when they travel. Now, the American traveler is 2 to 3 times per year. Well, let's count staycations and say that they only travel twice a year, really. And let's say that only once a year they turn on the service. That's another 136 million months paid, or another $1.36 billion in annual revenue. About half of that is free cash flow. So suddenly that's over $2 billion a year in U.S. revenues. And I think that's a light estimate. And you have well over $1 billion of free cash flow. 6 times free cash flow is $6 billion. The market cap is still only half of that. But that money finances the new batch of satellites. And then that new batch of satellites basically covers most of the rest of the planet. The batch of satellites after that really expands it to everybody. And suddenly, if you take a look at the investor presentation, what you find out, let's see here, what you find out, oh, there it is, 5.6 billion mobile phones across all of these MNO partners. Whoa. Now, 3.7 billion people have no 4G or 5G broadband access. Oh, I had this all marked. Where are we now? All right. 5.6 billion mobile phones move inside and outside of coverage. Of that 5.6 billion, 3.7 billion don't have 4G or 5G. They're just going from basically no service to 2G or 3G. So that means that you have quite a few people who could end up signing up for this. The MNOs already cover over 3 billion of those people, and they should be able to expand into the entire 5.6 billion over time. And that's just a lot of sclera. So this is kind of how things have gone. They were able to do 2G calls a long time ago, which is, you know, for the emerging markets, I mean, that's already all they have when they're close to a tower. So if they had it all the time, you know, that's already a value. But then they figured out, okay, we got the 4G going. And then suddenly, all right, a couple of months tinkering, we could do 5G at 14 megabytes per second. So it's kind of a big deal. All right, Vodafone, AT&T, Verizon now, you know, they really have huge penetration around the world. I showed you all these companies, right? They have 50 of these companies. That's why they can potentially have the most customers. And if they average $10 a head, it's just mind-boggling. Now, I do think that only around 10% of people will have it turned on all the time. And then I think the other people will turn it on for a month or two a year based on when they're moving around. All right, so let's go back to the article. So as I did the math on this, I took pretty conservative estimates. One of the subscribers said, man, Kirk, that's awfully conservative. Yeah, because I only took the 6 times free cash flow based on private equity. I didn't consider what the market can take it to or what a takeout would take it to. So all of my numbers are potentially half of what you could really see on the revenue side, and then half again on the valuation side. So my numbers might be only a quarter of what could actually happen. But just at a quarter, right? At a quarter of what could actually happen, you have a company that is basically a 20 bagger from here, right? Don't freaking get hyper and sell it because, oh, nobody ever lost money taking a profit. Sure you did. If you owned NVIDIA a couple of years ago and you sold it, did you lose money? Yeah, kind of you did. That's a huge opportunity cost. Opportunity cost is losing money if you get flighty and do something that you shouldn't do. So if you've gotten flighty, fix it and fix it quick, right? Don't squirm over a dollar or two when you're looking at a potential 10, 20 bagger here, and maybe it's 100 bagger. Numbers are mind-boggling. It's a $1.1 trillion a year market now, and it's forecasting by the end of the decade to be a $1.5 trillion market and probably $2 trillion in the next decade. It's a lot of freaking money. If they get a piece of all that, holy cow. All right. So, investment thoughts. Our cost basis is pretty low. I hope everybody has a cost basis under 5 at this point. This doesn't include the options that expired, only the options that were assigned, and there were a couple. So I had options assigned to me at $5 minus, I think I had gotten 75 cents or $1 for those at the time. So you're looking at those shares are around 425, and those were my big purchases, right? Under 5, and then some assigned options. So you're looking at my average cost basis is 421. And then there was other money that I collected along the way. So my cost basis is pretty certainly in the 3s. It might even be in the 2s. I haven't bothered to calculate it. I don't care. I use that cash for other stuff. And let's presume that I lose it all. So let's just call that my cost basis, 421. Feel pretty good. Now, what does this mean? Why did I put that up there, right? As I mentioned, a lot of people are tempted to sell. I reiterate that's probably a mistake. Find a way to buy the dips. If you have covered calls, roll them out, buy some shares at the same time, right? So buy some shares today and then roll out those calls, and hopefully you get them called away higher than the share price that you buy today, right? So you might have to roll them 2 or 3 times. Don't let perfection or emotions or what you think you're supposed to do because other people said you should do it or because Kramer said you should do it. Kramer says that stupid thing that nobody ever lost money taking a profit. It's just not true. Opportunity cost is the thing. So, if you think you're an excellent trader and you want to trade, that's fine. But, I'm an excellent driver. So, be careful with that. All right. I think that the things that Wisniewski told me were pretty prescient. I asked him, I said, will there be a delay? He said, maybe, we'll see. Basically, I don't think there's going to be a delay. If it is, it's only a month or two. And who cares? Really, who cares? If you get a chance to buy more and round up your asset allocation, which I was telling you to do months and months ago, maybe that's your last chance in the teens. So I've been trying to do the asset modeling. And I told him, I just keep coming up with gigantic numbers. And, he said, look, we haven't issued any forward guidance, but I think the markets will like what they see for the U.S. subscriptions. He did say that $10 to $15 range in the United States. And he said, all you got to do is look at the mobile network operators, which are AT&T and Verizon here. And really start to back out those numbers, which I just did for you. So you're probably looking at $2 billion a year of revenue and above. It could be 3 or 4 billion. And then again, margins in the 60s is what he alluded to. I used 50% just to be super conservative. A satellite blows up, they have to replace it. It's only partially insured, that sort of stuff. So I always try to use smaller margins than what I actually think are going to happen. Just in case, that's the way it goes. All right. I then asked him how often the satellites have to be replaced and does switching to 6G in the 2030s matter. The interesting thing here is that the satellites are G agnostic is the term that he used, meaning that whether it's 5G, 4G, 5G, 6G, it don't matter to them because the conversion to the G signal actually happens at through the MNO, not them. The satellite's just bouncing the signal and processing and bouncing. So they don't care what G it is. It doesn't matter to them. They don't have to change anything. They have to replace the satellites every 7 to 10 years. So these first 5 satellites for the United States probably get replaced pretty quick, right? Because they're first gen. And then the next generation, which is the next batch of satellites that they're building, I think we can reasonably expect those to last closer to 10 years. And as has been the case with DirecTV and Dish, their satellites usually go well beyond their expected life range. So I think that 7 to 10 year range is probably pretty real, which is why the margins are so high, because they go periods of time without much capex. So it's kind of a wavy line. And once they get the first complete constellation up, then it's just, which is going to be condensed into about a 4-year period. Once they start the replacement cycles, now all of a sudden, you're further out. So you're every 10 years, you're basically replacing the constellation. There will be some redundancy built into that because some of the satellites will in fact last longer than 10 years. So it should be pretty nice, and they can measure it as they go. How fast do we have to replace these? Where in the constellation are we developing a gap because something's deteriorating versus another spot in the constellation where it's holding up really well? Science. And so I think that my 50% margins are for sure to be met. Can they keep it in the 60s forever? I don't know, maybe. The technology should get cheaper over time, right? They should learn things. All right. So that is AST SpaceMobile. I really don't want you selling this. So T-Mobile and SpaceX have been working on things. And one of the things that happened with the SpaceMobile test from their smaller satellites is, one, the signals aren't very good, and they actually caused interference with other satellites signals. So they're not going to get a waiver to put up thousands of satellites to do what around 100 of these are going to do. So I wouldn't expect any competition from SpaceX in the next 2 or 3 years. And I actually think it's probably closer to 4 or 5. So they're going to have really huge first mover advantage. And that's a big deal. They already have the MNOs set up. Could over time SpaceX, infringe into their market? For sure. We're not going to see the American companies get any Chinese or Russian business, and the Indian business is only partial because Vodafone is who they have the MNO deal with. I think that Vodafone ends up taking business in India. They have something like 210 or 220 million customers in India right now, out of whatever it is, a billion to whatever it is, billion one. I think that it's going to be interesting to see if Vodafone picks up clients in India, because they could add 100 million, 200 million clients pretty quick with this type of service. The one thing that is interesting is that the MNOs, right, your cell phone carriers, are very incentivized to push this service. Why? Because they're not really having a lot of growth anymore because of the churn and prices kind of being pretty static. This is an add-on that they get half the revenue. So, they can add $500 million or $1 billion of revenue by pushing the service, and you can bet that they're going to do it. So I would expect a big hype machine from AT&T and Verizon to sell this service. I think they're going to go after T-Mobile customers who travel, professional customers, enterprise customers. I think you're going to get high-end clients switching away from T-Mobile, which really already happens. If you're a serious cell phone user at the enterprise level and you're traveling, you probably aren't using T-Mobile. And if you are, you're probably like, why do I use T-Mobile? It's not as robust as Verizon for sure, which is what I switched to. And I don't even think it's quite as robust as AT&T. And with AT&T and Verizon adding the AST SpaceMobile service, it's kind of no-brainer that if you're trying to really be in contact all the time, you're going to switch to one of those two providers. I think Verizon probably stands to benefit here pretty well because their terrestrial network is already, I think, slightly better than everybody else's. Interesting transactions was Verizon and Vodafone both sold some cell phone towers that they owned. So interesting that they would sell off cell phone towers, I think. Any questions about AST SpaceMobile? Somebody says maybe the Block 1 satellites only last 5 to 7 years. Wisniewski said 7 to 10. So I would say, these first satellites are going to get replaced pretty quick. So once the entire constellation is up, I think you'll see the U.S. satellites replaced or augmented with, maybe they'll put 4 more up there and increase the web a little bit. And then as they do replace them all, I think it's going to be a staggered time frame with old and new and creating overlap. But you probably won't see the U.S. satellites replaced inside of 7 years, but I think you might see a few go up inside of 7 years. And then I think 7 to 10 years is a pretty strong cycle. I think it's closer to 10 years, to be honest with you. All right. Only option that I'm selling right now, and I'm actually not, because I already sold the September $15 puts for Permian Resources a month ago. But if you want to get more exposure to Permian Resources, and I'm about to tell you why you would, The October 15s are getting about 80 cents, so about 5% for a couple of months. And here's why you would want to expand your holdings of Permian Resources. Remember, I told you that they might pick up more Delaware Basin assets? Well, they did that today. They bought Occidental Petroleum's Delaware Basin assets that were adjacent to their properties already. That means that they can, and it was accretive, 99% accretive, so really there's no, the wells pay for themselves. The laterals for new wells can now be longer. That's the thing I talked to you about back in May and June, is that longer laterals are more economic. And now that they've expanded their acreage footprint by, it's like 27,000 acres or something, they can do the longer laterals, which are more cost effective, which means that keeps their cost down in the 60s on the high end with new completions, and sometimes as low as in the 40s for break even on a barrel of oil. So Permian Basin just made a great transaction. They're doing a small secondary and a bond offering to pay for it. But when you do the back of the napkin math, it looks like the second half of the year will have over $1 billion, and it looks like close to $1.2 billion of free cash flow, which means that you should expect a special dividend from Permian Resources later this year. So I bought Permian Resources shares today for $15.25. If you want to sell puts or buy shares, I think right now is a good time to do it. The realization that they're going to have a special dividend and then buy back all the shares that they just issued probably pretty quickly within a year or two, I think is going to wake a lot of people up. I think this company just became very buyable by 2 or 3 other companies that are in the Delaware Basin, or they can merge. But Permian Resources just, man, are they in great position? So they are my favorite mid-sized oil and gas producer because I love their assets, and they have a lot of inventory that hasn't been tapped yet. So the Midland in the Permian Basin, which is a little further east, and I think north, is the one that where most of the production is right now, and the Delaware is where the production is going to be in the next few years, which is presumably when prices will be a little bit higher as supply gets a little tighter in general, because most of the other basins are either flat or seeing falling production. And I just don't think we're going to see the Gulf of Mexico ramp up anytime soon. I think it'll be lucky to replace depletion for the next 5, 6, 7, 8 years. You're going to see the growth of U.S. supply stop going up the next few years, I think, end of the decade at the latest. But because we're using up oil at the pace we're using up oil, and global demand just keeps going up about 1% per year, it's all getting tighter and tighter and tighter and tighter. And I think that you're going to see oil prices at some point, especially if Kamala wins, because I think she'll do it on purpose the way that Biden's been allowing it to happen. We need to see alternative energy, otherwise we're beholden to OPEC again in the next decade, and nobody wants that. So it's important that oil prices don't collapse, otherwise that disincentivizes the alternatives. And one of the alternatives is a new wind technology. It's basically, it looks like a refrigerator, and it has the wind blow through some fibers, and the fibers move, and it creates a molecular charge. You don't even need a big fan blade anymore. They just made wind energy twice as efficient. I think it was in Germany. As soon as the Chinese copy it and start building it, the price just comes down dramatically. I do think that is the future of wind. You're just going to put these on top of commercial buildings, and you're going to have wind power. So, that's not great for solar. Although solar is clearly during the daytime the best way to generate power. So I think what you're going to see is a wind at nighttime, which is when wind picks up, and sun during the daytime. And I really think that batteries are just going to be the connecting mechanism. I don't think we're really going to store power for weeks at a time. I think maybe a couple days at a time. And that brings down the cost of that part of the grid. We do know American Transition or other companies have 15-year backlogs to expand the grid and make it smarter. So it's all happening. All these things that we've been talking about for years are happening. They're accelerating. The only thing that would potentially hurt it is if gas and oil prices went down. Gas is still plumbing the bottoms, but now we're going to see 100-ish natural gas generators built in the Permian Basin and throughout Texas to power data centers. So yeah, we're using it, man. We are actually in drill baby drill. I don't know why people think that we're not. We just set a record again this year. But Permian Basin, Permian Resources, which is in the Permian Basin, exclusively, right? That's their only properties. Is just very well situated. I think the jitterbug right now is something that you can buy. So if you don't have at least a half position in Permian Resources, I think you can do it. And if you want to sell $15 puts, I think you should do it. All right, one last thing to reflect upon the Saturday call is that normally during recessions, when T-bill issuance goes up. So even though the Fed hasn't lowered rates, T-bills have been getting issued more in the past year. And the Republicans in Congress don't like it, so they think, oh, that's stimulative. You're trying to do this into the election. No, they're just trying to prevent a recession. And lo and behold, it worked, right? There is nothing. This is Torsten Slok at Apollo. There is nothing suggesting that the economy is currently in a recession or about to enter a recession. And what did I tell you? That's going to happen. And I showed you that 100% of the time, small cap stocks go up if you cut rates and there's no recession. So Torsten Slok, kind of a bearish guy, no recession on the horizon, no recession right now. And we know that interest rates are going to get cut soon, right? There's nothing telling us that there's a recession or one coming right now. I have my concerns about 2026, but for the next year or so, I'm not too concerned. I do think we get selling in the stock market in the second half of 2025 because I do think that some of the tax breaks do go away at the end of 2025. It doesn't even matter who wins, and that is going to cause some selling at the end of 2025. However, as we get closer to the boomer retirement crisis, and that might be several years out yet, at some point we get quantitative easing. So I could see, the euphoric rise, a breath, some choppiness, maybe a rally, and then the boomer crisis and a crash, and then you have QE come back. It doesn't look like the banks are going to need the QE. They just need to be invited back into the Treasury system with some favorable accounting rules to get through the commercial real estate. There really needs to be some action in Congress to stimulate home building. I have suggested some sort of direct tax credit up to maybe $50,000 per unit against personal income. So it would be encouraging individuals to build. The commercial builders already have all sorts of incentives. They don't need it. So, if we all of a sudden had a million more people that wanted to build a house because they could write off $50,000 against their income year one when they do the build, now all of a sudden you got a lot of people with say $150,000, $200,000 of household income. It was a little tight for them to build. They're bargain shopping for stuff, and they say, well, gee whiz, for an extra couple bucks, I can build a house. And really buying a house that's on the market versus building, I think the costs are like dead even, but you get new versus old. So why not new? If they also give me a tax break, I'm for sure building a house. And I think a lot of other people would see it that way. Hopefully, the people that I talk to pass that on to somebody who passes it on to somebody that passes on to somebody that makes a decision, that actually can officially have an idea. But right now, it looks like the scenario that we are anticipating is that, we're going to get rate cuts. There's not going to be a recession. Small caps generally rise 50% over the next year. I'm not positive it holds this time because IWM really is not highly profitable. But I do think that some of the stocks that we own really could be doublers and triplers like in 18 months. It really could be a big rally, and then we have to figure out how we want to manage those asset allocation. Okay, that's all I got for today. I have a lot of work again. I told you that the bane of my existence is paperwork. You know what the bane of my existence is? Correcting paperwork that I did the first time and I didn't check 2 boxes. Then I get a phone call and I got to tell them, and then I have to redo it because they can't check the box for me. All right, I got it done. But I have 3 articles that I want to write. I'm going to get the AST SpaceMobile article on the public side. I have an oil article that I have to write, submitting to Permian Basin Magazine and to Seeking Alpha, a different version of it. Basically, I'm going to be talking about the peak oil supply plateau or the peak oil plateau. We basically are entering it right now. So peak oil supply, because we can't really produce much more in the future, and because OPEC won't, and only a few countries are panic pumping yet, and more will come. But it looks like oil supply is topping out over the next several years. It looks like oil demand is topping out over the next several years. Then how long are we on that plateau where supply and demand are, at about the same levels for 3, 4, 5, 6, 7, 8, 9, 10 years? Because cars take a long time and switching the power system takes a long time. I think you're really going to see a tightness in the oil and gas markets that lasts well into the 2030s, and that's going to be really good for the gas and oil companies that have survived and consolidated and economized their operations, right? Have made their operations more efficient. All right, everybody, have a good day. I will get this up as quickly as possible. I will actually edit it today. And then I have the 2 interviews I did that I'm submitting to Seeking Alpha tomorrow. I have a couple of things to do, so those might not get submitted till later in the week, but such is life. All right, take care.